types of retirement plans does your company handle?
Well, we handle any kind of individual plan, so all the IRAs as well as a solo K, which is a man and wife kind of situation, or single proprietor, somebody that's working alone, either on a W-2 basis or filing as a sole proprietor.
Mm-hmm.
So it's either 1099 or W-2, but they have to be considered a sole proprietor. And that they basically can have their own 401k for just themselves or themselves and their wife if they're working together in the same firm.
Right.
Now, the advantages of the solo K are dramatic over a SEP IRA. There's about 6 advantages. Number one, you can borrow up to $50,000 or 50% of the basis for any purpose, which you can't do with a SEP. You can have a Roth-like contribution element to the solo K at Pensco, which you can't do with a SEP. So you can actually contribute up to $16,500 after tax each year to grow tax-free for life.
Mm-hmm.
And by the way, when you use funds inside of a solo K, either the Roth or the profit-sharing components, and invest in real estate with leverage, you never pay tax on the leverage portion. There's an exemption for 401ks, including the solo K.
That's interesting.
So that's a dramatic. So let's say you put 30% down on a property with the Roth component of the solo K, and you borrowed the 70% from the bank, and that allowed you to get a 30% yield or whatever overall on the IRA's portion of the money. You'll never pay tax on that gain, as long as you follow the rules and leave it there for 59 and a half in 5 years.
Mm-hmm.
So it's incredible. You can leverage your gain and not pay tax.
That's great.
There are a number of other benefits. So if somebody has a SEP IRA, by the way, you can roll that into a solo K.
Mm-hmm.
So you can take what you already developed in a SEP or a regular IRA, except for a Roth IRA. You can't put that into a solo K, but you can take any regular IRA or a former 401k or a SEP and roll it into the solo K. Once you do that, and then you start using leverage, you're avoiding that UBIT that you would otherwise pay in the SEP or the IRA.
Yeah, and UBIT, for folks who are not familiar, unrelated business income, or taxable income, or income tax.
Right.
So we may talk about it a little bit more later, but in some cases, retirement plans actually have to pay taxes on income in the entity. And so this has been a problem, particularly for the leveraged real estate. Okay, and so we can go beyond that. Okay, well, let's see here. Actually, you've actually touched a lot of the things that we talked about for some of the unusual.
Well, I can certainly give you some more if you're interested. I mean, we've actually started thousands of companies, and our biggest success story was somebody who came to us in March of '99 and used $1,800 to make a contribution to an IRA. And they were going to use a traditional IRA, and I encouraged them to use the Roth IRA.
Okay.
They bought founder stock, as this was the CEO, and he and some of his friends started this company. Well, long story short, in June of 2002, having already sold one company and then selling the successor company and having that go public, he moved $32 million in profit against that $1,800 back into his IRA because his stock had appreciated through all these sales and going public. So instead of having an $1,800 Roth IRA tax-free, he now had a $32 million Roth IRA tax-free. He subsequently used that like an investment bank and invested in a bunch of other startups. Mm-hmm. And he has a series of Roths now that came from that, spawned from that original $1,800 Roth worth about $800 million.
That's
all
amazing.
Tax-free, all
Wow.
tax-free.
Tax-free.
So if you have somebody who's a founder of a company, they have to really consider strongly using their Roth IRA as an investor.
Okay.
Because any gains in the future down the road are going to be tax-free.
Wow.
We've started 65 banks in the United States, de novo banks. That is, somebody gets laid off at a big bank like I did, and they decide to get together with some of their buddies and start a community bank. Mm-hmm. And where do they turn? They turn to their 401k for cash.
Yeah.
They roll out to an IRA and they use that to fund the new bank.
Okay.
So we're really proud of the fact that we're a tremendous source of capital for new businesses. People don't realize that 87% of the businesses in the United States are not funded by banks or the SBA. They're funded by friends and family.
That's
because
right.
when you have a bright idea and you go to a coffee shop and say, look, you loan me to a banker, you loan me $50,000 to start a bank, they'll say, come back in 3 years, show me a balance sheet and
Right.
income statement, and I'll be happy to help you.
Right.
So friends and family using their IRAs are a tremendous source of capital in the United States. There's about $4 trillion in IRAs. And the self-directed industry has got about 100 billion of that, and we're growing at about 25% rate.
Just amazing. Okay, what types of investments are well suited to hold in an IRA or Roth?
Well, I would say anything under the law in our case,
Okay.
because we're adept at handling any kind of an asset. I mean, we do have the 40 head of cattle. We have a palm tree farm down in Riverside, California. In that case, it turns out you can't plant a palm tree in Riverside unless it's grown in Riverside. And so one of our clients bought the only remaining farm down there, so he's got a lock on the market.
Wow.
But, you know, I think really before you get too far afield in thinking about all the possibilities, think about what you really have a skill in, where you have some knowledge or where you know somebody that does have the knowledge. And if it's anything other than the three assets I meant, types that you can't invest in, collectibles, life insurance, and subchapter S, give us a call us on our 800 number, and just tell us what you want to do, and we'll tell you whether you can do it or not.
Yeah. So, from my standpoint, I like to see passive type investments. So, like we talked about, there's one of having a business that you're conducting underneath this IRA. On the other hand, if you have it as a set up as a C corporation, then it's like a passive investment as stock.
Sure.
You can have active real estate investment to some degree as far as, you know, like rental properties. I like to see those like long-term type of holds rather than the quick flipping type of
right. Well, flipping
transactions.
is not working these days anyway.
Yeah. So anyway, but the big thing about the business interests, okay, that if you're operating a business underneath an IRA, other than, like we said, under a C corporation, we can have an unrelated business tax for that, where the IRA is actually taxable, or the Roth. But if you got a high enough return, it's still, you know, it's economics, I guess, is what it
That's
boils
right.
down to. Where can you get the best return?
Yeah, exactly. That's what it's all about, is getting the best return. That's why I argue with a lot of CPAs about buying real estate in an IRA versus buying it outside the IRA. And many of them are misinformed, and we'd cover that in our last talk. But one other aspect is we don't always want to focus on the tax, because if you're paying a lot of tax, it means one of two things. You got a bad CPA, or you're making a lot of money. So you always want to pay a lot of tax if you're making a lot of money. You don't. If you're paying no tax, you're not making any money. So it comes down to yield. The whole game is not how much tax you're paying, it's what's your yield after tax.
Right.
So if you got a high yield of 14% with your real estate investment in an IRA, would you rather have that or a downturn of 40% in your stock portfolio?
Right.
You don't care what your tax is.
Yeah. Or like 2% interest in a bank account.
Yeah,
or something
yeah.
like that.
It's always after tax yield, but CPAs tend to focus on the tax issues,
Yeah.
rightly so. But because they're not investment professionals, the game is really not the tax. You always want to mitigate it, but you want to get the highest gain after tax.
Right. Okay. How about private money mortgage?